How's it, guys? Welcome back to FX Rhapsody. Let's just take a look at some early setups, entry setups for week, we are week 17 now. So let's look at a couple of entries that happened today. First pair will be your Euro USD. Okay, let's look at the Euro USD entry that happened early today, basically. Sorry. So first of all, you can see this is all in 5-minute time frames. Look, I'm not making anything up or trying to manipulate any trades or whatever the situation. This is basically everything that I always talk about, you know, the way that the entries work. So let's just run through it and you'll see exactly, this is exactly how I analyze as well. So on the 5-minute, you can see that this was the low that happened. It was kind of last week, if I'm not mistaken. Yes, end of last week type of thing. So you can see this break. Let me just expand this a little bit more so we can see this. Just make it better. There we go. So you see this breaking candle, or this candle breaking this, let's call it structure, the support area, and there's huge push to the downside on that candle. So how do you find your entry? Now, it is quite simple. We talk about this every single time I make my analysis. Swing low, swing high to swing low. And you will see, I'm just going to expand this Fibonacci because I've got two reasons. So you can see the swing high, breaking that structure, price coming up, forming that low at the bottom, coming up again. Now, there's two entries that you could have taken. The first one being obviously in this 62% area, so basically tapping that 62%, and I always talk about that 62 line. So you'll place your entry right there, basically around about there, and your stop loss will be above the 100. It's a little bit of a tall order stop loss. It's like a high stop loss, but I mean, you know, rather be risk free than anything, so manage your risk better. So first take profit will be your 45 pip versus a 26 pip stop loss. So that will be your first entry. Second entry, you can see this the candles moving up a little bit more. Now the reason for that is, and I have talked about it briefly, is you can see this candle or this fair value gap that was formed right there. So I'm just going to expand that a little bit, and then what I normally do is I just take my fib, I just take the, you know, the block that was formed, and I just take the halfway mark, basically the 50%. So if I can draw a line from here to there, and as you can see, it's on the 50%. That's the green. So let's take away that, and let's take away the block. So that's halfway in that fair value gap, and you can see price pushing on that or into that halfway mark, and that's a more perfect entry, if I can say that. So I would have waited maybe, you know, just for that little, especially with this big gap that was formed here. Perfect entry right there, and as you can see, price tumbling down. So yes, two very nice entries that you could have taken in the Euro USD this morning. Let's move on to the next pair, which will be your British pound. Next on the list will be British pound US dollar. So where are we now? British pound US dollar. So similar thing happened, as you can see. Excuse me. Also, let me just see where price is. There we go. So always keeping an eye on price. Just want to see where this happened. Round about. Let's just double check everything here. So we had that movement to the downside. So this was, what's the date here? 22nd, 23rd. So around about here. Okay. So I had a little bit of a low here. There's the date. Yeah, there we go. Okay. Okay. So that was the low of last week. As you can see, price going on, and this was the opening of this week's movement. So you can see price going below it, going above that high, and then staying below that area. Now this push to the downside, just going to expand this a little bit. So you can see this push to the downside. Now climbing into that, now let's say you had your Fibonacci from this swing high to that swing low, and I'll show you something now. So you can see price going swing high, swing low, not pushing into that 62% area. But again, now this is the area for me, that's a no trade. I want price to push at least into that 62% area. A lot of guys go 50%, but you know what? I stick to what I do best, and you know what works for me. And this works for me. So basically, as you can see, that high, low didn't work. So now we wait for the next high and low forming, and guess what's happening? So you get that swing high and that swing low. So swing high, swing low, and voila. This time price pushing into that area, and that's where you sell, you know, hitting that perfect entry over there. So again, another setup, another sell. Let's just go down just above the 100. So that's a smaller pip, smaller risk, 5.6 pips, and hitting your third one with 24. Now, keeping that in mind, let's just zoom out. So now we have this, and I just wanted to double check this quickly while I've got you sorted. Let's just have a look. That was my previous analysis. Okay, so that was a previous low. I was just checking to see if there's any other liquidity that price is hunting. So for me, that's perfect. You know, that entry, I mean, if you could just take that entry, like I said, you know, that's a 5 pip stop loss, 24 pip take profit. You know, a lot of guys stay in their trades. I climb out when I'm happy with my trades, and then I just carry on to the next one. And that's what we're going to do. British pound, Japanese yen. So what happened in the British pound, Japanese yen this morning? Okay, let's just, there we go. Let's get to where we are. Sorry, currently at. Let's find the right time. Because this is 5 minutes, I just want to see the start of the week. More or less, yeah, okay. So this was the end of last week. End going to start. There we go. We started off with this gap. So that will be your low. Price rallying up again. Okay. There. And that is obviously going to be your high. I'm not going to put all the highs in because, you know, we already can see what price did. But I mean, that would have been your high. So we were waiting for any break of structure, breaking that high or low. So we take that high out because, as you can see, price went down. So where would your entry have been? So a case scenario like this, again, you know, price breaking that low. And as you can see with the naked eye that there's going to be there were no pullbacks basically all the way to the 62%. So you still have your Fibonacci in from that low. You understand? From this high to that low, you're waiting for price. But then again, with that Fibonacci in there, you can see this fair value gap that was formed right there to there. Okay, that was the gap again. Okay, from the candle to that candle's the wick. All right, again, let's do this Fibonacci, the 50%. Let's just get it in. Let's pull it all the way. You can see that's the green line over there. So that green line, and look at that. So now we take out the Fibonacci, and let's take out that block. So basically you could see that is basically another entry that you're looking at, and look at that price pushing up nicely into that area, and bam, that is exactly where you place your entry right there. Okay, a little bit of a drawdown, not much. There's going to be your stop loss just above that. A lot of guys place it a little bit closer. I like placing it just above that high of that previous one. So what was this? 18 pip stop loss, and then my take profit would have been this low, just below that low, just because that is what I do. I just like to, I know price is going to be hunting that area right about there. Okay, that's going to be my target area. So you can see 55, 56 pip reward for 18 pip risk. Not bad, not a bad start for, a Monday. And that is now the third one. And then USD dollar, or USD dollar Japanese yen. Okay, let's just find the correct point of where basically everything happened. I'm just zooming out just to find the dates. There we go. Okay. So as you can see, I'm just going to zoom out a little bit more. Okay. As you can see, there was this high that was formed, and then price rallied down all the way to this area, the low, which was basically the area that was open. It also opened with a gap. So again, price going into that area. So look at this. Take your Fibonacci from that high to that low on that line. Okay, let's expand it a little bit. And look at that. What's the area we're looking at? We're looking at the area between the 62 and the 79. Okay, that's the area we're looking at. And look at that. You take your sell right about there. A little bit of a big stop loss, 28 pips. But again, look at that. First target was already 47. Second target that was hit right here, that's 83 pips. And guess what? It pushed down all the way to 120 pips. Look at that. Perfect. Hit that target, third target. So again, what's the risk? 28 pips. Versus, and then your reward, 120 pips. So come on, guys. It's not something new. I talk about this every single week. I do my analysis about this every weekend. It's as simple as that. Stick to I'm not saying it's a strategy, but practice this. Practice your Fibonacci, your entries, your break of structure, and you are good to go. So guys, that's quick entries this morning. Little bit of volatility index, WK17 index, for those of you that's on my Telegram group. Showed you a couple of entries on there as well. And yes, together with a bit of NASDAQ entries. So, all of these things add up eventually. So you don't always have to trade one pair and take huge amount of pips on it. Just add it up day by day, little bits by little bits, and it all adds up. So guys, that's all from my side. I hope you enjoyed this videos. Don't forget to hit the like button, subscribe to my channel, comment in the comment section, hit that notification bell for more analysis, strategies, video content coming your way. And hope you are having a wonderful day. Happy trading, guys.